Tons of Bitcoin news today. Bitcoin is holding steady at 93,800 Monday at the time of this recording. A lot of news to get to around Bitcoin. We're going to explore some of the use cases. Also, Trump meme coin is in the news, and a crypto project that secured over $100 million. I'm Mick. That's Mike. Big week again. I feel like every time we hop on, there's something major to cover. Jack Mallers, creating a company that supposedly is supposed to compete with Strategy. Lying about this one?
Yeah, I mean, you're talking about Bitcoin news and Michael Saylor, Permable, and he's got some company now, right? 21 Capital is kind of a joint venture between Tether, SoftBank, and Cantor Fitzgerald, which we'll get to why that's interesting. And Strike, like you said, Jack Mallers, the Strike CEO, he is the co-founder and CEO of 21 Capital. They debut with over 42,000 Bitcoin in their treasury, which is about $3.6 billion, and makes them the third largest corporate Bitcoin holder globally. And, similar to Michael Saylor, they're aiming to help institutional retail investors gain direct exposure to Bitcoin outside of ETFs, and plans to develop financial products, capital market instruments, and media focused on Bitcoin. So Michael Saylor has some friends now who want to buy more Bitcoin for the masses, and probably raise a lot of money to do so.
Is it friends or is it foes? Because comparing Strategy to 21 and how 21's value proposition and how it's supposed to be better than what Strategy is doing. So there's like a lot of competition here.
It seems like the market wants this exposure, without one, ETFs, and two, without buying Bitcoin directly. And I think one of the things that we talked about in past episodes and what Strategy is doing, it's getting a little bit more complex, right, by the day. It started as just buying Bitcoin and then just raising equity, selling equity to raise funds to buy more Bitcoin, and then they created this all kind of other more complicated vehicle to raise money, and people are still buying in. So I don't know exactly what 21 Capital, what kind of products they're going to launch, but I think it's going to be a similar take in terms of buying more and more Bitcoin and creating these financial vehicles to raise that money to buy more Bitcoin. The most giga-brained financial minds couldn't even dig into how complex these vehicles were and these assets were, and because they were so layered, and because they their tentacles were just spread out into so many different things. So that's kind of where I get a little bit concerned. But where I also get a little concerned is, I know we talked about this before a little bit, is so Cantor Fitzgerald was led by Howard Lutnick, who is now Secretary of Commerce, right? But Cantor Fitzgerald is still being run by Lutnick's son, Brandon. So you're seeing this, administration kind of blurring the lines between personal profit and the regulations that they are, the policy that they're implementing. I think that is certainly a very, very big concern in my mind, that this continues to happen, which we'll kind of get into another example of this happening in our next conversation.
There's people trying to play the game to their advantage on both sides, obviously. And I don't know if we can like truly get away from that, whether we're in crypto. I know we want to believe that crypto solves this problem and makes everything so pure and equal. It's hard to do that because we have the government in place. And we've had this conversation before in terms of the impact of the government, right? The amount of control and the amount of say that they have in everything. And so
Yep.
it's just kind of one of those reality things. And I think that's a big reason why people do prefer meme coins, because it's fun. It's not as complicated. I mean, yeah, you got to worry about who are the holders, how much of it is locked, unlocked. There's a little bit of nuances there too, but not as complicated as this, right? So what am I trying to get to? Well, Donald Trump hosted a dinner for his token holders. 70% is the jump that Trump coin made after news broke out that he is hosting this dinner. I thought it was kind of a like a Web3 founder play here. I mean, I've been to some dinners where it's like only whales, and not that I'm a whale, but I don't know, somehow I got invited to it. Yeah, it's a very interesting dynamic, and for it to come from the president to host something like this, it continues to surprise me in terms of his involvement in crypto and how much he's actually doing in this space, whether we like it or not, right?
Yeah. So, yeah, Trump announced a private dinner to be held on May 22nd for what turns out to be the top 220 holders of this Trump meme coin. Originally, there was some speculation that you had to hold like hundreds of thousands of the token, but now it seems like I think you only have to hold for like $400 or $500 worth of token to be in the top 220. But right, so essentially, upon its announcement that the Trump token surged, like you said, 70%. I believe it hit a market cap of almost 3 billion, and people were buying. Clearly, people were buying, which is great for Trump. Trump also earns fees on these trades. I think he netted $900,000 in 2 days after the promotion. Is this a pay for play? You know, it's like, okay, let's offer some incentives to pump the price, except this time it's coming from the president of the United States, the leader of the free world. So, you know, some senators kind of took hold of that. You know, our good friend Senator Warren and Elizabeth Warren and Adam Schiff demanded an ethics probe into it, right? Like, this is potential pay to play. You can essentially get access to the president by buying his token. There's, you know, kind of downstream risks like foreign influence and conflicts of interest. We talked about conflicts of interest, you know, ad nauseum here. Yeah. So, you know, it just kind of continues this administration. We just talked about 21 Capital and Lutnick, his role with Cantor Fitzgerald being one of the partners there. Now this, it's I guess nothing surprises me anymore.
What do you feel like is the biggest concern here?
Okay. My biggest concern is that there is going to be this lack of credibility for our industry because we've got someone at the helm that admittedly has done everything that he promised on the regulatory side for crypto. Everything that we had hoped for, he's done, which is great, right? I give him kudos to that. But what's the reason behind doing that? Is it because he believes that crypto, you know, is this great technology like we do that can change the world? Or is it because he was going to make money off of it? So I think, sure, you can have all that foreign influence. Sure, you can have all that. And that's all kind of just bunched into this. But like, it's pay to play. It's just kind of making a mockery almost of our industry because there is money for him to be made to make the regulations looser than the prior administration.
I,
What do you think about that?
I see your point. Now, if it was, let's say me, right? I've got my community network spotlight, and let's say I wanted to create a very similar experience. I have this token, and I say that if you own this token, then meet me at consensus, and we'll have a dinner together. You're saying like that's okay, but because it's the president doing, that's where you feel that's a little bit of an eyebrow raiser for you.
Yeah. Yeah, 100%. 100%, right? I mean, if you're a public servant. If you work on the government, you are a public servant. And we can go into the whole thing with, Congress people trading stocks and all that kind of stuff too. I think that falls very much into this bucket where you have outsized access and influence over the laws that everyone has to abide by in the world, regardless of whether you're talking about technology, just your everything, anything. You've got outsized access and influence to the information that flows, and you you've got input into how the country runs, especially in this administration where everything's being done right now by executive order, by essentially just Trump, right? Whatever he feels to push through, because he's got they've got all the branches of government in control. There's obviously a lot of power right now in his hands, and it doesn't make us look. We've got so many issues in being serious, in looking serious, like a serious industry, and just pile this issue on, because nothing looks serious right now.
Okay, yeah, your concerns are valid. I think a lot of people would hear that and be like, "Preach, Mike," because that's exactly how I'm feeling. I'm trying to see if I can find like the other side of the spectrum here, and just point to the use case of creating a token gated community, which essentially that he's showing like business 101 in terms of how to do that. Right now, granted, are we all presidents? Do we have that kind of power? No, but if you have influence, if you have a following, it's showing you how you can replicate something similar. Now, whether or not you use it for good or bad, I think ultimately that comes down to the person that you are. One of the things that realizations that I'm having is a lot of our flaws in crypto and Web3 are less on the technology and more about who we are as an individual. Do we have integrity? What do we believe in? Or are we full of animosity and we want to, take revenge? Because this technology is so, can be so harmful, right? And so you have to tread carefully, of course. But on the bright side, it is showing what you can do, and you can use it responsibly if you are a good human being, which again is a completely different story when it comes to President Trump that we could have a debate on. But in regards to this, yeah.
So, okay, let's take David Sachs as an example, right? The crypto and AI czar, right? I think it turned out to be all true, but there was a lot of people saying how, look, he had Craft Ventures, the VC firm that obviously invests in crypto and AI and broader technology startups. But he divested. He had exposure to one of multi-coins funds, Solana, all kind of stuff. Like he divested everything, right, before taking his role in the government. Now, I think that is admirable. And I don't know if the right thing to do is like force it, but it is admirable that he took the impetus on him to do that was, is admirable. But like, you're the president of the United States. Like, you don't, maybe we don't have to ask you to divest of all your crypto. Like, don't keep doing stuff. Don't launch a token and keep like pushing, forward. Like, don't be a crypto entrepreneur. Just be the president. And if you truly believe that crypto is this great technology that can change things, like, just focus on the regulatory stuff. Focus like on your policies. Like, that is your job now. So that is where that's my biggest concern. It's, I know there's always going to be conflicts of interest. Why, like, if you're a public servant, why push those conflicts of interest? Because you're just it's just a bad look. It's a really bad look to really push the lines on those conflicts of interest.
And to your point, Mike, it's a big reason why a lot of people got turned off by meme coins. The launch of Trump coin, I feel like, was the peak, and then it was downhill from there. And when we look at the industry as a whole, we're saying, okay, let's get back to the things that matter. Let's get back to real use cases, real utility. And on that line, I mean, what we're seeing in the news, like, that's actually what's happening, right? Solana-powered decentralized wireless network Helium reveals AT&T collaboration. I mean, we're starting to see a lot more of this. A big plus for the DePIN narrative.
Yeah, like, this is kind of how it starts, right? Where you're not going to necessarily expect a company like the size of AT&T to just flip the switch and take their network and put it on crypto rails, or accept stable coins right away, or launch their token, right? But now you're just seeing companies like this, these large large corporations kind of tangentially integrating crypto into their business operations, right? So in this case, AT&T's 117 million subscribers can access Helium's decentralized network, thousands of locations across the US. So their AT&T customers now have like expanded coverage and enhanced mobile services in areas where their network is limited, right? If you look at AT&T's coverage map, it's all over the country, but it's going to be strongest in the major metropolitan areas and likely weakest out in the rural areas. So now this is going to be, they're able to leverage Helium in these areas where their network access is limited. So this is like a major vote of confidence in DePIN. And a lot of times, we get a lot of people, outsiders of crypto, will say, like, what's the use case? Crypto is not solving any problems. And a lot of times I will point to DePIN, like Helium, because I'm a Helium subscriber, and how that Helium token has bootstrapped the network to massively and quickly and spun up this big network at such a lower cost than in the past. So I think DePIN is really one of the areas that we need to push forward in terms of use cases and marketing, because we're seeing large corporations, and everyday users using DePIN networks and you actually using these products in the real world.
What's interesting is that Helium was supposed to be an alternative for companies like AT&T, and here AT&T is coming in and saying, like, look, we want to partner up with you guys and use you as a plan B in case our network goes down. I'm wondering how this, or if this would impact AWS at all, because AWS is a powerhouse. And so are we going to see them also come in and team up with, a decentralized
and a Akash or a Render or something like that, right?
Yeah. Like, I wonder, like, how far are we from that happening? That would be huge. And so, like, who is that? Who's going to be that main player, right? Because I feel like a lot of people are trying to be the big dog on campus. There's a lot of options there. when it comes to those DePIN plays. Like, who's going to be the one that will end up working with AWS?
Yeah,
I don't know.
First of all, I don't know. Yes, I think technically, decentralized compute networks are technically DePIN. I don't know. I kind of just think that it's so digital, it's so digitally accessed that I maybe put them in another category. But yeah, I get what you're saying. Like it is. You're right. I mean, I think in that case, yeah, we just didn't necessarily, we couldn't really see AT&T leveraging, kind of a frenemy now in Helium, right? And Helium, and maybe it's the point that like Helium's just not that big yet, not that big as on a competitive level with someone like AT&T or T-Mobile or Verizon. And there's clearly a benefit to integrating with them. But yeah, I mean, I think what's kind of the next chip to fall? What's that next industry that will likely leverage decentralized version of itself to help itself? It's a pretty interesting question.
And Mike, maybe I'm overthinking this, but I'm also wondering if this could potentially lead to buying out Helium, right? And having our Web2 players, these massive Web2 companies come in and buy them out. And well, like, what would that mean for Helium, the token, right? The people that are actually buying Helium as an investment, like, is that just going to, potentially just dwindle?
I mean, there has not been that would be like a ridiculous case study because I mean, there hasn't been a M&A transaction from a Web2 company buying a Web3 company with a token, I don't think. So not off the top of my mind. So I don't, that would be crazy. That would be, I mean, it's going to happen one day. No doubt about it. It's going to happen one day.
We almost saw the other side of it, right? With Say potentially buying out 23andMe.
Yeah. I think that's I mean, that'd be interesting to see how that that kind of equity gets folded in and how that would impact price, or like would Say, I don't know, pay in the Say token somehow, so there's a lot of different dynamics there. But yeah, either way, it's going to be, it would be a very interesting use case.
And on that note, Mike, you bring to me 3 different projects that currently have finished a raise. And some of these are small, but really interesting use cases. And some of these are accumulating massive check sizes, like 100 million. And in case in point, Upexi, I believe, secured $100 million funding. What's the deal with them?
Dude, I've never heard of this company before. And there's a reason why. They are like a consumer healthcare goods company. All right. And okay, I'm just looking up on their website now what their brands are. They make medicinal mushroom products. They made some pet care brands. I've never heard of them before. I haven't seen any of their products. I don't think, at least, not off the top of my head. But they raised 100 million in a round led by GSR, participation with Big Brain Holdings, Anagram, Delphi, many others. And they're going to use these funds to build a Solana treasury. So now we're going back to this strategy of just accumulating crypto assets, even though it has very little to do with your core business. And they're also going to develop a large-scale crypto mining platform through its subsidiary Quantum Hash. So massive pivot here, but very much in line in with strategy and some of these other seemingly unrelated companies that just see the value in accumulating crypto and how that helps their shareholder value.
Their website is like very simple too. It's not even like very Web3 focused,
Well, that's the thing
about this company.
a Web3. But okay, but they've got a couple of links there up there. If you go up to the nav menu on like chain bit miner and quantum hash, why don't you click into one of those and see what that's all about?
Our mission to deliver shareholder value through strategic investments. Okay. The Bitcoin Mirage.
Right. So, mining, crypto.
There it is.
And then,
Bitcoin.
pet care.
Yeah. Wow. Okay.
Yeah.
Interesting.
Mm-hmm.
Next, Mike, let's go over this one. This is Nous Research. Sounds like an AI play here.
Yeah. So they've been around for a while. I think they've been very active in the BitTensor ecosystem. But yeah, they're a decentralized AI startup, primarily in their name, Nous Research. They're very new research heavy. They raised 50 million in a Series A round from Paradigm. And they announced that they're going to use Solana to aggregate idle distributed compute to train their popular open source AI model, Hermes. And huge round. So this is probably based on their awesome traction on Hermes. Their Hermes 3 model has been downloaded 50 million times, which led to a 1 billion valuation this round. I don't know if it's Hermes or Hermes, if you want to, use the French accent. But yeah, they've done a lot of good research, and obviously got a ton of traction with their latest model. Led to a big valuation and big raise.
DePIN, AI, it seems like both of those narratives, like they all gravitate towards Solana.
Yeah.
Last but not least, Arch Network. I was excited to see this one on your list, Mike, because shout out to Caleb, who used to be at Big Brain Holdings. He actually just recently told him that he joined this team. He was excited about joining this team. And then I hear you come out giving me the news that they secured 13 million in funding. So it sounds like they got a lot of momentum. And I'm excited to learn a little bit more about them.
Yep. So the key thing about Arch Network is they're Bitcoin native, right? They're not an L2. They're a meta protocol built directly on top of the Bitcoin L1. They raised 13 million in a Series A round led by Pantera and Multicoin. Like I mentioned, they don't require asset bridging or soft forks. They're a meta protocol built right on Bitcoin. And that's one of the things about the Bitcoin ecosystem, which is a ton of activity there. We've made a few investments in the space. There's different ways to build on Bitcoin. And you've got these meta, there's challenges with all of them, right? If you talk about kind of the purest way to build on Bitcoin, it'll be a meta protocol. Then you've got the L2s, like Stacks and Core and BitLayer. And you're just going to see a lot of different, there's a lot of design decisions that you can make when building on Bitcoin that aligns with kind of the different, kind of purity levels of how you want, so some of the Bitcoin holders have and some of the philosophies there. So, very cool Arch Network. Raising a good $13 million round. Yeah. So just a little plug. We are hosting a building on Bitcoin panel on May 20th, and we'll send out more information to your group. I think we'll talk a little bit about pros and cons of building that meta protocol directly on the L1 versus building on an L2 or launching an L2. So could be, I think there's a lot of trade-offs to be made. We'll dig a little bit deeper into that.
I'm thinking just off the top of my head, one of the downsides I imagine is probably the speed.
Yeah, 100%.
Right. How do you solve for that problem? And I'm sure all the maxis out there are rolling their eyes like, oh my gosh, here we go again. Like something to clog up the network. It will be interesting to see how Bitcoin, which is a store of value, like how that narrative shifts and if it shifts, because now you have teams that are building on top of Bitcoin natively. And so I don't know, like, are you going to have a clogged network? Is one going to fail? Can they both coexist? If they can, I mean, talk about extreme value for Bitcoin as a whole, right?
You know, a lot of people talk about Bitcoin's long-term security problem, right? Where if with all these subsequent halvings, miners aren't going to get a smaller and smaller block reward, and then they're going to be more dependent on transaction fees to make money. And so, you know, I think with all this activity that is happening in the Bitcoin ecosystem, if we're using it not just as a store of value, but you know, with smart contracts and you know, whether that is a meta protocol like Arch Network or an L2, but you know, using Bitcoin as a settlement layer, like those transaction fees over the long term have to go up for the Bitcoin L1 to maintain its security budget. So, you know, that's a whole that's a whole development that needs to happen, or else, look, I think you know that security budget conversation is legit, right? When the block rewards are tiny, something has to make up for it, or else miners are going to leave.
From day one, Bitcoin was created to be able to solve a lot of these problems. But you know, the longer we go, the harder it is to predict that far into the future, right? And
Yes.
I wonder if we get to a place where we do start to see limitations of the Bitcoin network. But you know, so far so good, right? So far so good. People are calling for 200K Bitcoin this year, even.
Yep.
You know, let's see what happens. But Mike, great episode as always. A lot of news around Bitcoin. We talked about Bitcoin in terms of the price. We talked about Bitcoin in terms of institutions buying and offering different solutions. And we're ending it with talking about Bitcoin from a technology perspective and how people are building networks that are native to the network. So on that note, if you found this video helpful, please subscribe to the channel, like the video, comment down below. What was your favorite take? And we'll catch you guys in the next one.